right, all right. We're back.
We're back. First episode of 2020.
Yes. We had a vacation.
We're
sort
back.
of.
We'll never do this to you again until the next holiday.
Right. We leave. We leave. Look at all the stuff that happened, Anthony.
A lot.
A lot of stuff.
A lot's gone down.
Yeah. So, welcome to Freightonomics, the podcast where we focus on the economics of freight.
Yes. Bring the two together.
Bringing them together and have a little fun along the way.
Yeah.
So, I am Zach Strickland.
I'm Anthony Smith.
There's Anthony Smith over there. Anthony is a rugby star that specializes in economics.
Rugby star is
yeah.
a stretch. It's a stretch.
Yeah. Did you have a good break, Anthony?
It was good. It was good. I got to Arizona. It was a bit disappointing on the weather front. Got to see the family, but I was like, oh, Arizona. I'll be in the 50s, 60s, 70s maybe. It was raining. It was just raining.
Raining in Arizona.
50s the entire time. I could have stayed in Chattanooga for that weather.
And it floods real quickly out there.
Real quick.
Yeah.
Yeah, real quick.
You wouldn't think it in the desert. I guess
No.
Many people wouldn't think that in the desert, but those that know, it's actually quite a big thing out there.
Yeah. I enjoyed the time, though. I enjoyed the rain. Rain's nice, nice little change of pace.
All right. Well, it is January,
Yeah.
Anthony, and it's not my favorite month of the year. I don't know if you know that.
It's an exciting month, though, Zach.
I just, having worked for 15 years
Yeah.
in freight, it is one of the hardest months of the year for the carriers and shippers even, and brokers. Me and Kevin L., we were on the spot this week.
Right.
For those of you that watch the FreightWaves TV shows, me and JP normally do a weekly recap of what happened in the spot market and anything that may or potentially impact those rates. And we were talking about it this last week about how this is the time where we share memes with each other.
Yeah.
And who can get the most creative, because it is a dead period. This year we have 2 weeks off, really.
Yeah.
Because we had 2 Wednesdays, which again, why everybody missed their Freightonomics.
Yeah, yeah.
It was
right in the middle of the week.
2 weeks of just not a lot happening, but a lot did happen, Anthony, while we were away.
Yes. And so we're going to jump in on some of that, right?
Yeah.
A quick recap of some of the stuff that happened while we were gone. One of those things for me. Yeah.
Yeah. So we had quite a bit of news hit the market. We're not going to go into detail on those it's significantly, but we are going to just touch on these because they do have a pretty lasting impact. Some of these pieces.
Right.
So the truckstop.com outage. For those of you that watch What the Truck, one of our other podcasts, I actually filled in with Kevin Hill. Mentioning him, he filled in a lot. So did I about this that happened right before Christmas. You may be asking yourself, well, why does it matter now in January?
It matters.
It does matter.
It matters.
Oh, well, anybody that operates truck during this time of year knows that it is a hectic time of year, especially on the spot market. So in our Sonar platform, we track tender rejection rates, which is the rate at which carriers reject their contracted freight tenders from the shippers. So the higher that number goes, that's basically upward rate pressure.
Yeah.
So people are willing to pay more to get that capacity or get that truck to their dock, et cetera. And they hit their highest levels of the year by a mile,
right?
Like a country mile in terms of, excluding the early part of January last year when things were really coming off of a hot 2018.
Yeah.
But June tender rejection rates were around 6%. We topped 14% this Christmas. So
it's pretty significant.
Yeah, it was significant. So what that means is there's a lot of spot market activity.
Yeah.
Because that means that these shippers are going to have to go down their route guides, get into some, they're going to have to pay to get that truck there.
Yeah.
Because a lot of these drivers, they're going home for the holidays, and there's just not the availability that you see throughout the year. The week between Christmas and New Year's, fun fact, it is the most vacation time of year in the United States. Did you know that?
No.
Yes, it is the single most vacation week in the United States. Followed in a distant second, I believe, is the 4th of July week. So
really,
we vacation in 6-month intervals, effectively.
Yeah, yeah.
It's we're very seasonal people.
Start to be predictable at some point in time.
Us American humans. So truckstop.com goes down. A lot of people are relying on that to source their freight. It was a ransomware attack, it turns out, and they got back online and everything became all nice and hunky dory. But that meant that there was one less avenue available for people to source their capacity for Christmas.
Yeah,
that was a big one. So along those lines, we had the ELD hard mandate. We talked about this on the last show a little bit. We touched on it.
Yeah.
AORBDs are, kind of an older version of an ELD. They can be upgraded on the software side to an ELD. There's just additional features and regulations that have to be present in the ELD for it to be, compliant for the FMCSA. Well, a few of these, companies reportedly had some outages, whispers of these outages, and technology kind of failed here because they weren't, and that was kind of, I guess, the theme of the late part of 2019 here over the last few weeks, actually the early 2020 so far, is some of these technologies failing.
Yeah.
And, some of these things are not private. They're government implemented, such as the ELD and whatnot. And the next one, the FMCSA clearinghouse.
Yeah.
It crashed day one. Overwhelming number of...
Y2K.
I mean...
This is what they expected Y2K to be like, but now it's like 20 years delayed.
Yeah. Yeah. It's effectively the same thing. It's Y2K with freight. And, it's hard. This happens all the time. I think anybody that's worked in a company, you plan for something and then you think that you've got it fully tested and functional, and then what happens? But everything happens all at once. And it's like, well, you just can't plan for everything that happens. And these are normal, anytime you launch something, but it's also a lot of the reason people are hesitant to adopt new technology. This is the cost of adopting new infrastructure and changing your existing infrastructure. It doesn't always go smooth. Now, I don't think the clearinghouse crashing is going to collapse the freight market by any means.
Right.
That's not going to happen. And the ELD thing is really not going to crush the industry either. These are just little hangups. We're not going to make a big hyperbolic statement about how the whole market's in chaos.
Yeah, sky's falling.
But it is kind of a hindrance. It is a pain, especially here in January when you're already depressed like I am. And you have to go through these little hoops, these carriers and, these companies out there that are having to deal with some of this stuff. These are just little headaches that really get in the way of what, everybody's trying to have a good January.
Right.
And they just can't.
Yeah.
They just can't.
In January, I mean, I think another one on your radar of I think that you're going to get into a little bit later is, the weather in January, right? And
the weather is, every quarter, you get on these earnings calls from some of these bigger carriers, and every single one of them cite the weather as this huge impact.
Like a surprise every year.
Like I used to make fun of, and some of the people are here in this office. I used to make sarcastic statements to them, saying like, "Hey guys, did you realize that winter comes every year?
It's approaching.
And you know what happens in the winter? We have this cyclical pattern.
Yeah.
The seasonal pattern, I should say.
It's strange.
Where people stop shipping freight.
Yeah.
And January is the bottom end of it.
Mm-hmm.
And the weather has a lot to do with that.
Yeah.
But also the weather impacts like the network. So in terms of like why these companies are complaining about the weather is they're literally having these moments of where their trucks just can't get moving. The snow gets dumped across the northern tier of the country, and all these accidents can happen. I mean, safety is becoming an increasing concern.
That's a big part, right?
Yeah,
the
we're
road
going to
conditions.
talk about that a little bit later.
Yeah.
Here in the show, but yeah, it's a big deal. And one more thing on my end to cover real quick before we dive into the real fruit and berries of the rest of this. And you give me, we had some economic releases.
Oh yeah.
As well as some that are coming up that are pretty important to freight. AB5 was delayed to the 13th. We had Assembly Bill 5, as it's called, was pushed back to the 13th. Now, I don't personally think this is a huge win or loss or anything like that. Everybody that was impacted by this was already they were a day away from implementing this. Yeah. And it's not like, all these people were just sitting there just waiting on, well, maybe something's going to happen at the last minute.
Right.
No. It's,
right.
It's one of those things. They were already in process. I know Prime had reportedly offered like over 6,000 relocation package deals to people to move out of the state of California.
Yeah.
Which is, that's pretty telling to me right there. Prime is one of the biggest carriers in the United States. Heavy reefer carrier, has a tank division. I'm sure anybody that's driven a car on the interstate has seen a prime truck out there.
Yeah.
They are willing to move their people out of a state
Yeah.
to avoid this.
Yeah.
And that just goes to show you what kind of impact this can have to the industry.
Right.
Especially the state of California, which anybody that's worked that has had to deal with California in general, it is like handling people working in a different country.
Yeah.
The laws are totally different
Regulations
there.
completely different.
Oh, you know all about these regulations.
Especially on the housing side.
Oh yeah.
The permits.
Oh man, they are heavily regulated state, and it makes it very difficult to work. Now, they can get away with this,
Yeah.
because it's basically he's got a GDP of a small country.
Yeah. And population through the roof. I think population's probably past Canada at this point. I think it's on
Is it
par with
really?
Canada. Yeah.
Wow, I didn't know that.
Yeah.
Okay.
Fact check me.
Yeah, I was gonna say we need a fact checker like they have at ESPN.
Yeah.
The research department at ESPN is sick. They could have it to us in like 5 seconds.
Exactly.
So, California, this AB5 ruling is really, something that there's a lot of people that probably have a big concern about this, especially if you are operating in that state.
Right.
It's gonna be crippling to those that aren't prepared to pay for it if it does go through.
Yeah.
And I think this, basically the California Trucking Association is the one that's got the injunction against it, and it doesn't feel like they're going to pass this fully, at least in terms of trucking.
Right.
But who knows?
Yeah.
I mean, it's California.
Yeah.
That's basically the idea here. For those that don't really know, is if you are considered a contractor for a company, so that means for trucking specifically, if you're an owner operator, you don't technically work for Prime. You work on your own.
Gotcha.
But they ask you to go and haul freight for you.
Gotcha.
Now, the problem is it gets a little wonky when it's like, well, what makes you a contractor? Well, you pay me independently. You don't give me health and welfare benefits. I cannot tell you what to do with your business.
Yeah.
You are coming on board to do a specific task for me, which is carry freight when I want to.
Yeah.
Well, there's a little bit of a gray area when it's like, well, if you want to work for us, you have to do what we tell you.
Yeah.
So that things get a little hazy in the middle there. And if they pass this law, that means that you're basically either work for Prime, or you don't.
Right.
I can't go out and hire people. Now, the trucking industry, as we're talking about right now, extremely seasonal.
Yeah.
So right now, January, what's happening in January?
Not a lot.
Not a lot. There's not
on
a
the
lot
trucking side.
There's not a lot that happens in the economy in January, is it not?
It's not. I mean, there's some things that tick up slightly, like people tend to buy more furniture in the winter.
Okay.
I think it's because they're confined to their homes a little bit more.
Sure.
And like, I've always hated that couch.
Yeah.
You know, we do something about that. And
So internally, like, I guess they're doing some refurbishing.
yeah, and that's the great thing about winter. That's the great thing about the cold months
You
is
can have your winter.
you can do a lot of internal reconstruction.
Okay.
And yeah, I mean, it's good. Little exhale. It's good for every once in a
No,
while.
I mean, I don't mind taking a break.
Yeah.
From constantly remodeling my house. But I guess I like the option.
Yeah.
I like to have the option to do whatever I want. The
That's
winter really limits my options.
Yeah, that's fair.
To that regard, and I think that's the way it is, especially in the northern tier. I mean, think about it. They get feet of snow dumped on them. They can't really do much.
Yeah.
There's not a lot. I mean, road work really comes to a halt up there, which is a big, infrastructure building type deal, and a lot of that freight gets moved on trucks.
Yeah.
I've met with several carriers over the past that actually specialize in that type of freight. So it's not just limited to a certain section.
Right. Yeah.
Whatever.
Yeah. It's a bit of a slowdown across the economy, just as you mentioned. Yeah.
Yeah. So speaking of, you're a fan of the winter. So you've got some news to report on the macro side that may give some of these carriers out here something to be excited about. What you got?
So on the macro front, one of the segments that's doing well, excuse me, housing. So this is an area of the economy that was positioned to do slightly well in 2019, but there were supply side issues. One of the things that we're seeing now is that housing permits. And so this proceeds construction on the home.
Starts.
Yeah.
Right.
Proceeds starts. And so in order for a home to be built, it has to go through the regional governments, local government to be permitted to be built in that area, that plot of land. And so the permits are an essential part for starts, and permits right now are on a 12.5-year high. And so
That's insane.
Yeah.
12 and a half years.
Yeah.
So that's before the bubble.
That's before the bubble.
Right? I mean,
I think I might see where you're hitting towards here.
yeah, the 2008 that everybody, people may not know about it.
Yeah.
Happy that they don't, I guess. But
Just erase it from your mind.
yeah, the whole the Great Recession, as it's been tagged in 2008, 2009, was caused by the housing market collapsing.
Yeah. I can't wait to be like 75, 80 years old and like, sit down, let me tell you about the Great Recession, kids. But yeah, so permits are doing really well right now. The thing is that's really holding it back is the supply side issues. So there's not enough skilled labor to build it, which is a good problem to have because a lot of people are employed. They have options. But the lack of skilled labor is starting to bump up the pricing for the homes. It gets at that bottom
So you got to pay for your house.
Got to pay for it. Yeah, and that's going to add to some of the prices is that skilled labor. And so the other thing that's limiting activity is available land. And so available land is also going to start to really limit.
Well, especially out, in a place like California. I mean, if you look at a Google Maps of California,
Yeah.
there's not a lot of space left.
No.
They're
And
cramming you wherever they can find a crack.
another place, like you mentioned, regulations.
Yes.
So that's going to be difficult for them, especially so in the Northeast, each region has different breakdowns, right? It's between single family and multi-unit housing starts.
Right.
And so these characteristics look different across the country. So when we're looking at the South, it's going to be primarily driven by single unit homes because we have land in the South that you can just plop these single family homes on. Not so much in the middle of Boston, or in the Northeast, where there's not a lot of just available land. It's a very mature market. And so lean a lot more on the multifamily home side of the spectrum. And so that's going to be a lot more of the impact there and existing home sales. So.
Yeah, so, for those of you that don't know, the real impact to trucking here, anybody that's shopping at Home Depot or going to a Kirkland's or something that buys, something sort of finishing or furnishing for a house, these all have a trickle-down effect.
Oh, yeah. And so it's not just the flatbed activity because that's big. When you have the home going up, flatbed activity of these building materials going across the country, it's huge. Right. But the downstream effect, because as we just talked about, there are limitations right now for the housing starts.
Right.
There's the much bigger portion is existing home sales. That's well over 80% of the home transactions. And so there's also, of course, remodeling projects that go into, as you mentioned, Home Depot and stuff like that. Mm-hmm. But when you're feeling confident about buying a home, you're also buying other things. You're filling it up with stuff. And so there's going to be that downstream effect where, you're getting home appliances, you're getting refrigerators, stoves, ovens, all that good stuff, couches, TVs, filling your new home up with new stuff. Yep. And so even if you're not buying a new home, you have an existing home, those downstream effects are still in play, and all that has to go by freight. And so that's a bit of good news, because even if we're not seeing that boom right now with flatbed, even though construction spending is doing well right now, that downstream effect is strong for freight. And so
in spring, that's when it really turns up.
Yeah, so spring is really going to be, I think, in the next 3-4 months here. Can't wait for that. Yeah. I love all the seasons. I love all the seasons.
I'm into spring.
I love all the seasons.
You can have January.
I'll take it.
And then you got something else that's kind of tangential to this. You've got we've talked about a lot about housing has been a positive, actually for the last couple of months now, really trending up after a really soft. Well, when the rest of the economy was booming. Because of costs and things like that. I saw lumber was at like an all-time high at one point in 2018. It was like May of 2018.
Yeah, a lot of weird stuff going on with building materials. Another aspect of it is employment conditions. And so jobless claims, you got to have a job before you go out and buy a house. And so jobless claims have been steadily falling or pretty much staying at a pretty low level historically. And the participation rate isn't quite where it was pre-recession levels, but it's nice.
What is it? Now explain participation rate.
So when you're looking at unemployment, typically it's tracked by people who are actively looking for work. And so if you no longer are actively looking, you're a discouraged worker, you're no longer considered in that unemployment survey that's been given out. And so
the normal number, the unemployment rate that everybody reports, is under 4% right now.
Yeah, 3.5.
Yeah, there you go, which is super low.
Very low.
I remember my macroeconomics teacher said that was actually a bad sign, because you have underemployment or overemployment.
Mm.
Overemployment, which it means that businesses can't find enough skilled labor, like you were mentioning.
Yeah, for housing.
For whatever the job is. So
Mhm.
there's a lot of inefficiency there in terms of business.
Yeah, yeah, and when we start to see, there's another aspect put out by JOLTS, um, the quit rate, and so the quit rate is also key to watch because that's how confident um, consumers feel about, hey, I feel good about the job market. I'll go test the waters and see what's
Exactly.
out there. And so when the quit rate is high, that's usually a good indication that consumers are feeling good about the job market. They're feeling confident about finding new opportunities of employment. And so that's also pretty high as well.
Yeah.
So consumers are still feeling confident, and yeah, it's
That's
been
good. That's good for the consumers. But I mean,
yeah,
if you're running a brokerage, something with a traditionally high attrition rate,
yeah,
that's not great.
no, no,
Because that means that you're going to have to really do your best to make sure that that company has got a good culture, your people
yeah,
are happy. You can't just go out there and say, well, you're lucky to have a job.
yeah. You got to differentiate yourself a little
Yeah.
bit, and so that's going to be, I think, a big part for the companies that are really looking to hold on to their employees. Is
Right.
how do you differentiate? What kind of benefits do you have, and what kind of perks are you going to bring that is going to limit your employees from looking elsewhere? And so, as you mentioned, with brokerages that already have that kind of high attrition rate, that's going to be key.
Yeah.
But I guess the big part is, when these people are feeling confident and they're making, they have a pretty good amount for disposable income. Even if they don't have the disposable income, they're feeling confident enough to run up their credit cards. That's going to lead to more stuff being bought. That's going to lead to more freight being moved throughout the economy as
People getting a little lazy, getting a little relaxed.
get laxed,
Yeah.
and then they start swiping, get that Amazon Prime going, and
Then we make it easy.
yeah, yeah,
We make it real easy to
Oh,
spend
yeah.
that money,
oh yeah,
don't they? Well, I guess it's good and bad. January again, slow. People could get bored, start looking for other jobs and stuff like that. If you're an employer, that's not great. If you are, but however, that might be a good thing. If you're super slow and you're like, hey, maybe you do need to go somewhere.
yeah,
I don't know, but it's January and it's going to end at some point.
yeah,
January, February. So I was looking at, some of the data we have on our freight situation in January. And I know that before I came here, I didn't really I knew that we were always slow in January.
Mhm.
I had that down for a fact. I didn't realize that just about everybody was slow in January. It wasn't just me, not just in trucking, but in a lot of different, businesses.
yeah,
A lot of spots of the economy are slow. Well, I was looking specifically at ours and I'm like, okay, so how can you change, like, what is different about this January versus last January and the January before that, et cetera? So we have seen some interesting pattern shifts over the last 2 years or so in freight volume. So we only drop about 1 to 2% off of December freight volumes the last 2 years
Really?
in January, which is a pattern shift from the 4 to 7% that we saw the 5 years preceding that. So basically 2012 to 2017, it was a 4 to 7% drop
Yeah.
from December to January. So
Yeah.
it was pitiful.
yeah,
This time around, even last year when we were falling off of what we thought was a super hot time, it
Mhm.
didn't drop significantly off of December. And that's according to the Cass shipments index that I was looking at, which includes rail volume and truckload volumes.
yeah,
Now, our OTVI, our outbound tender volume index, supports this
Mhm.
to an extent because I was looking at that and I was like, well, actually, volumes this year
Mhm.
are exceeding last year
yeah,
by about 4% on average over the last couple of days, I
Yeah.
should say. It hasn't been significant. I mean, obviously we've seen a little bit more of a normalizing because we had that contraction between Thanksgiving and December. We lost a week.
yeah,
So everybody bought all their stuff there.
Right.
So we saw about 6 to 7% higher volumes in December versus last year.
Mhm.
Again, not comparing apples to apples because we have a shortened period of time for people to buy stuff and ship stuff.
Mhm.
But this year we're still showing up about 4% in volumes, and month over month we are down 24% in terms of where we
Wow.
were this time last month. So a pretty big drop right there. Now again, this is just a day over day thing
Yeah.
so far. That'll normalize out to I'm assuming we will still only drop about 2-3% this year
Yeah.
versus last year, but getting a little ahead of myself there with the forecasting.
Yeah.
Capacity, tender rejections,
Yeah.
they are about 300 basis points off of last year, which isn't that much. It's a 3%. So if it was, I believe we're sitting right around 7-8% right now. We were at 11 last year at this time.
Okay.
That's decent, but again, we were falling off that super hot 2018. Still, I think those comps are going to become a little bit better throughout the year, and we are about 46 basis points up month over month.
Gotcha.
So early in December, this time we were a little bit higher, not a lot.
Yeah.
We're a little bit higher now than we were about a month ago, but again, we're coming down off of a super elevated period of time, so it's really not comparing apples to apples. I think that is something relatively interesting to me, just to see where do we stand in terms of the historical perspective, because it can always feel like, just like we were talking about in 2018, 2019, like, well, we're comparing, lukewarm to burning hot.
Yeah.
And it's going to feel a lot cooler.
Yeah. Yeah.
And I think that people lost the idea that we really didn't lose that much volume.
Yeah.
The demand side was still there. We just had a lot more supply.
Right.
And that's going to be a common theme throughout the year. Now, this year, we're anticipating that supply side is going to be the one that's in correction.
Okay.
As long as the demand side does its part and stays relatively, decent. I don't think anybody's expecting a 2018 again, but those volumes were pretty excessive. But again, we were coming out of a really cold period for freight, and people just didn't have time to buy the equipment and get drivers on the road and get up to speed. So there just was so much going on all at once. That volatility.
Yeah.
That's what you look for.
Yeah.
That nice even climb is easy to manage.
Yeah. Yeah.
When things spike and shoot up overnight, I mean, it takes months for carriers to get up and operating, or even brokers.
Yeah.
And shippers. They're the ones that are out there. They don't know if their salespeople are out there killing it.
Yeah. Yeah.
It could happen all at once. Everybody's like putting in orders all of a sudden.
Right.
And Amazon Prime goes down. Technology.
Yeah. It's always going to fail you.
Yeah.
It's always going to fail you.
So, the market looks okay right now in terms of freight. We're feeling pretty optimistic, I think, so far, even though it is January and it's not the greatest month of the year.
Feeling optimistic. I like those words.
Yeah, feeling optimistic about when January ends.
Gotcha. All right. Something to look forward to.
Yeah, but you've got we've got a few things coming up that you might not be feeling so optimistic about.
No, and it's okay, because I have a bright outlook a few months from now. But as of now, no.
After January.
After January, after February, maybe even after March. But one of the things that recently came out that hit headlines was the ISM. So for those of you who don't know, this is the Institute for Supply Management. They have the PMI, which is the Purchasing Managers Index. And so this is a survey that's put out every month, watched by many who are really tracking anything within the manufacturing and industrial segment. But it's also pertinent to freight, because this industrial economy really is pivotal for dry van and flatbed trailers that haul these goods that are being produced throughout the country. And so the PMI came in at 47.2.
That's really low.
That's pretty low. It's pretty low. And so for those who don't know, 50 is the baseline. And so anything below 50 is considered contraction. Anything above 50 is considered expansion. And so this is the 5th month of decline, and of contraction, I should say. And it took many by surprise. I don't know why, but it took me by surprise.
Why would it take people by surprise?
I have no idea. I was trying to find where the catalysts were that they were looking at. I don't know if it was maybe they're looking at year-over-year comps, which still wouldn't have given that much of a catalyst. I don't know if they were putting more into the phase 1 expectations that hasn't even been signed yet, but
for the tariffs.
For the tariffs, yeah.
But does that have that much to do with it?
No.
Yeah, I mean that's we that's the thing. Like we don't produce as much stuff in house like we did in the past.
Mm-hmm.
It's coming from China, and South Asia and India, and I saw an interesting thing on India being one of the bigger importers.
I have high hopes for India in the coming years. Really, India and Mexico, but I digress. The PMI.
The PMI.
So the ISM, they put out a few different components, right? So they have the PMI, they have new orders, production, employment, inventories. The list goes on. Backlogs, and so the thing that I like to look at in the PMI is what's happening with new orders, because new orders is going to tell you a story of your future commitments and what's down the line that you have to produce or what's on tap to produce. I also look at production because that tells us what's happening right here and right now. I also look at the backlog of orders because that's telling us, okay, our new orders are coming down. Let's work on all this stuff that we haven't been able to get to, you know. Zach, the backlog of orders is at 43.3.
Oh, this is depressing. See, this is the January that I know. This is the way that I know. Now, it's not so great that we just had really what was the end of a quarter, fourth quarter, and these orders aren't coming in like, you know, like, oh, we've got surplus money left in the budget. Let's go spend it.
Yeah.
Because, you know, if you show too much money, you got to pay taxes on it.
Yeah.
And that's not great.
No one likes those.
So they got to reinvest in the company in order to make sure that they don't get too much tax penalty.
Yeah. And so when I'm looking at this, I'm not expecting, getting ahead of myself, I'm not expecting a lot from...
There we go. We were going to do these forecasts here at the end. So maybe we'll bite our tongue a little bit.
Yeah.
We've already given away a little bit.
Yeah, I'm not expecting a whole lot, let's just say, for the industrial economy in the opening months of 2020. But I am looking forward to the second half of 2020. We'll get into more of that later. But when I'm...
You know what? Go ahead. Let's just do it now. We'll recap what we predicted at the end, and then next week you guys can hold us accountable for anything that happened next week or in the next months.
So when we're looking at the industrial economy, industrial production is coming up next week. I am not expecting a gain here. So...
what gives you that inclination?
Besides the decline in the PMI, and recently, I think yesterday, we just got factory orders, new orders that came out that really looks at the manufacturing component. That's also down. So I am not optimistic about industrial production showing any kind of increase. So it had a nice little blip up last month, and that was mostly tied to GM's strike being called off.
Right.
And so now that was a nice bump up, and that's not going to be something that's going to be sustainable. Right. So I don't expect that to really have a lot of impact in this upcoming month.
You know, interesting thing about the GM strike, we did see that there was a huge, you know, in some of our data, like there was a huge bump of activity around the Detroit market.
Yeah.
After that strike ended.
Yeah.
Like at the end of October, early November, we saw so much activity in the Midwest.
Yeah.
It really actually, it had a localized impact to capacity there, not as much national, but it was an interesting thing to watch. Is it looked like GM was really just trying to make up for the month.
Yeah.
Which is like, you know, I don't know if cars are being purchased at that same pace.
Right.
Or maybe they have some sort of production quota. I'm not really familiar with how that works.
Or a backlog.
A backlog of orders.
Yeah.
There you go.
A backlog.
Which would have showed up in your in your ISM there.
But I think another big part that really kind of took away from new orders this month was the Boeing 737
Oh,
MAX.
that's right. The planes that don't work.
The planes that don't fly too well.
Yeah.
That the transportation component of the new orders for factory orders really brought down the overall trend.
Wow.
So that was a pretty big
How much of a percentage of a component is that? How much of the overall do you think do you think that there was, like, if that had not occurred, do you think there would maybe be like a over 50 or no?
Well, so I don't think that would have been over 50 for the PMI for sure. No.
Okay.
Just because there's just I think 13 different components for the PMI itself.
Right.
I don't think it would have done anything for durable factory orders either.
Sure.
I think, they have it excluding transportation. It might have been just about even or a slight bump up, like 0.1%, I believe. But there was a silver lining. There was a silver lining for factory orders, and that came from, it's a mouthful, non-defense capital goods new orders excluding aircraft.
My God.
And so this is one of my favorite components to look at for factory orders.
Because it excludes everything.
It excludes everything. It gets rid of everything. So
why don't they call it what it is instead of what it isn't?
You know, that's a government question.
Okay.
That's government. But for non-defense capital goods new orders, let's break it down. So non-defense capital goods, non-defense. So non-defense. So it's not any defense capital goods spending. Although there might be some ramp up in some defense spending here if things...
Oh, yeah, I was going to say, Iran and us are not getting along real
not
great.
Too well. So there could be a ramp up in defense spending.
Although they have been saying that there's no escalation on either end.
Right.
I know Trump would normally be like, "Oh, I'm ready to fight today," but
Yeah.
he hasn't been doing that, at least as of today.
Yeah. If it changes tomorrow, expect some
Yeah.
ramp up in defense spending.
Yeah.
And that could seep into manufacturing.
Sure.
But so because that's volatile.
It's what pulled us out of the Great Depression.
Yeah.
Man. Not that I'm pulling for that.
Yeah. I mean, it works. But when we're looking
it is a
at
thing.
it is a thing. When we're looking at that, that non-defense, because defense is a bit volatile, we strip out that component.
Okay.
Aircraft's also volatile spending. Strip out that
It's
component.
also very expensive. Like those are very big investments. So that's why it can
make
make
some swings.
such a huge swing. You can people buy 15 planes at a time, and that's a giant component. Like it's just the sheer volume of that is a lot.
Right. And I think the carriers that can secure those relationships with maybe defense contractors and things like that, they're going to be really positioned well. Even in times of cyclical downturn, if you kind of win over some of that contract business. But when we're looking at those two components, they're volatile, take them out, you're left with a good representation of business-to-business activity. And so when we're looking at business-to-business activity of capital goods, that's really something that's going to tell us about how businesses are feeling about spending and investing.
I'm sorry, did you say how they were feeling?
Yeah, yes. It's a good barometer for business activity. But it's more tangible because it's actually new orders. And so we're looking at new orders.
All right, I can deal with this.
Yes.
You're
it's
speaking
real numbers.
Yes.
2 consecutive months of rise. It's not indicative of a trend just yet, but it's a positive sign. So that's telling us, hey, we can maybe expect some kind of production for businesses' capital goods going into the mid part of 2020 potentially. And I think that would be a really good news for freight because when we're looking at the manufacturing segment, it has not really been beneficial for freight as of late, just because it's been kind of declining for
so long.
Yeah,
It almost seems to me like the decline is really what hurts more. Like if we just stayed flat, it would be like you wouldn't have this huge expenditure of like people buying trucks, oversupply, etc. But you really wouldn't have to deal with any kind of contraction because of freight, as we know, a lot of trucking companies operate at the slimmest of margins.
Yeah.
And the 90, I think the best operators make an 80 OR, and that's just a recent occurrence after a 2018 market. But, most of the time you got your Night Swifts that are in the 80s, somewhere in there. But most trucking companies live in the 90s.
Yeah.
Which means that they're not making more than 10 cents on every dollar when they pay for all the operational expenses.
Yeah.
That doesn't include debt servicing or, if they borrowed money, taxes, anything like that. So you're talking more about that EBITDA number.
Yeah. Oh, we're getting into it.
Earnings before interest, tax, and depreciation. Yeah. No, it's, and so it is, the volatility is really, I think, what makes a lot of carriers cringe at times. And shippers as well. I think volatility on any level. You want to have a nice control growth that you can forecast and predict. And we all know we don't live in that world. I have some unicorns out back, Anthony.
Yeah.
If you want me to sell you that nice even trend line up.
You know what?
2%.
I think in my Econ 201 class, we called that equilibrium.
Yeah.
I think. It's been years.
There you go. I remember that fantasy.
Yeah.
I don't know if it was econ or if it was my intro to fiction.
Yeah. Considering it's a lot of theory in econ, right?
Yeah.
And keeping all other aspects equal and changing that one thing. But I agree. I think once we operating in that equilibrium would be a fantasy. It would be nice.
It's not a thing.
But knowing that we live in this environment of volatility, one of the things I love about the government issue data is that it's granular. Things I don't like about it, that it's monthly.
Right.
Things I love about Sonar, it's updated on a daily basis. And so one of the things I love about Sonar is being able to use those daily insights to see, okay, where is this going? Where is the trend going? And how to pivot. Because back in my day, when we're looking at being able to advise companies on what to do, if you're already doing something and because it's the downturn and you're acting for the downturn and you haven't already prepped for the downturn, or you're trying to capture and catch up on an upswing, you're already too late. And so being able to prep before the the swings and the cyclical cycles is
Cyclical
cycles. I think I got that one from Chad.
Yep, he loves that one.
Being able to really pivot before those cycles change.
You definitely get early warning signs. You
yeah.
obviously don't want to get too held prisoner to the moment.
No.
You have the long term and you have your short term.
Yeah.
That you need to put together to really formulate your opinion. But last May,
Yeah.
we actually got some pretty early warning signs about things. We saw some really sharp declines in the overall market that really, I was like, wow, this is not usual. It's not normal. We got a lot of validation from that, saying like, wow, this has been a rough, and it's not just simply like oversupply. It was a demand side situation. So, things just kind of fell off a cliff there right after the Trump announcement about Chinese tariffs. And I think it caused a lot of people to take a pause, especially in the bigger picture sense of the word, as they were reevaluating spending and supply chain management type of things.
Yeah.
So, yeah, to your point, I mean, it does help to have at least something that tells you, like, everybody forecasts. I used to do this. I used to forecast year over year based on the week and the days, the working days of the month, you know, which is a big impact, especially when you're talking about earnings and things of that nature that you're held accountable for on the financial statements.
Yeah.
Which all businesses are to an extent. You are basically looking at that bottom line, and it is a fluid situation. So any kind of early indication that you are not going to make budget or your expectations are not being met, that's a huge win. Like if you can get a day ahead of something, that makes tremendous difference in your bottom line, year over year. Because, I mean, especially when you're talking about trucking and transportation, super slim margins, as I mentioned. Yeah. Every penny on the dollar counts.
Right.
So, yeah, I think, any other uplifting news, Anthony? I mean, we need something to give the people.
Okay, so so
we
one
got
thing's
industrial. Don't count on manufacturing and industrial.
no, I think so. I think industrial production down. In the next coming
housing
starts. I think up.
You think they're going to go
up? So I'm confident in them going up. The only thing I think would restrict them from going up would be that
land availability.
Yeah, that ever going supply side issue. So I think I'm saying up on housing starts.
Okay.
Other thing coming up next week, I think, is retail sales. So I'm going to say up.
I feel like that's a good. I'm going to agree with you there, because I feel like everything that we saw this year feels like that sense of urgency was there for everyone to go out and spend money, and it looked like our freight volumes were, like I said,
those volumes were pretty
5 to 6% up year over year. All that freight that was pulled into the country months ahead of time, the tariff pull forward, et cetera, was really nice.
Right.
So, I kind of want to bring everybody back down to earth a little bit for just a minute, because it's January and it's the Monday of the year.
Let's hear it.
So it's, we were talking about weather earlier, and it's an obvious concern for anybody out there operating in transportation over the road. There are those accidents. Well, this is, some of the accidents over the past several years have created these, what we call nuclear verdicts. And this is the time of year where we see a lot more of them, just because, winter weather, like we said, everybody talks about why trucking companies can't, operate as efficiently in the winter because they get stuck in ice and snow. Well, over the last weekend, we had a couple of pretty severe accidents involving trucks. Now, they weren't necessarily found to be the truck's faults, which I think is something people get confused a lot. They just automatically assign, well, it had to have been the truck's fault because it's the biggest thing on the road and they obviously can't control it well. Yeah. And that's just not the case. One of them in Pennsylvania, 5 fatalities in this one, very sad. Yeah. Pennsylvania is the 5th most deadly state to operate in.
Really?
Yeah, there's a fact for you. Texas is number 1. California, I believe, is number 2. But again, you're talking about geographic opportunity there. You've got a lot more people in those areas, so it's going to be higher incidence rates in general. Yeah. But yeah, Pennsylvania had one, and this was actually the way it's worded, it looks like the tour bus caused the accident, and it was, of course, wintry weather conditions, et cetera, that were in play, but nothing super unusual. Just all it takes is one little minor miscalculation by you behind the wheel, and something can go wrong. And then there was one in Indiana where 3 people, and this is super sad. This was a guy who basically just got distracted for a half second in his truck, slammed into the back of like a traffic jam, and killed 3 people. And he wrote this really just heart-wrenching note
Really?
to the families, like, I'm complete, like, handwritten note.
Yeah.
Like, I am completely wrecked over this. Like,
Yeah.
it's basically just saying I have nothing,
Right.
to give you, but
Right.
except for just I am extremely regretful about that situation, et cetera. So it's, this is a, terrible situation. Safety, obviously, always a big concern. But the point of this is these type of incidents have created this huge insurance cost bubble,
Yeah.
if you will. And it is one that's creating more and more challenges. I wrote an article over the weekend about this, how actually there's less fatalities involving trucks being reported, and there's also less unsafe driving violations in general, year over year, by carriers over the last year or so. Now, volumes are down, of course, but also it's not proportionate to the drop in, safety violations and fatalities is not proportionate directly to the drop in volumes.
Right.
But insurance costs are skyrocketing nonetheless. And it's because of these nuclear verdicts of things costing over $10 million
Yeah.
in settlements. And, we've had a few of them over the last several years that have exceeded, hundreds of millions of dollars. And so insurance companies don't win in these situations. They have to go in and recalculate that into their algorithm that says we need to charge X amount of money every time one of these hits,
Yeah.
because they're not just calculating the instances, the chances for you having an incident, but the cost of those incidents as well.
Yeah.
So that's inflating insurance costs significantly. And, it's not, there's going to be a handful of carriers that go out of business on these nuclear verdicts. That's not news. But what it's going to do, that's not going to be the real supply side contraction. What's really going to be the supply side contraction here is that it is an additional cost and a barrier to entry that the trucking industry has not had before.
Yeah.
Most of the operators out there can go, they get their $60,000 used truck and they can get on the road, file with the Department of Transportation, and they're on their way.
Yeah. Yeah.
And it's not a huge, now they can be their owner operator, except for in California if the AB5 passes.
Yeah.
But
Yeah.
but that's the gist of it. Well, now they have to go and get insurance that costs them more than they can make in
Yeah.
any given time. So basically, what I'm saying is they can't scale up fast enough to really implement or recover some of these insurance costs. So they're going to have a pretty healthy supply surplus while
Right.
they get going. Or they're going to have to charge more for it. And also, that's the second part of this.
Yeah.
These transportation providers are going to have to pass along those costs.
Yeah.
Because they simply cannot bear the burden of all this. So anytime you see one of these shipper, carrier, broker, I mean, that's just additional cost that's going to get passed through eventually downstream. But yeah, that's a big thing. Especially, I thought it was kind of timely that I'd written that article, and then
Yeah.
of course the next day I read about these 2 awful accidents
Right. Right.
going on. But again, not a fan of winter.
Yeah.
Not a fan of January here.
No. And I think we're getting pinged. I see Dooner in the comments on LinkedIn here.
Yeah, what?
What type of house is best investment, a 2-story or a ranch?
Oh,
Well, Tim Dooner,
hey, let's hear it.
leader of What the Truck.
Yes.
I don't, Dooner, what do you talk? So I think definitely a 2-story would be a good investment for you, Dooner.
For Dooner specifically.
For Dooner.
Yeah.
Because I don't think.
Because you don't think he can handle stairs?
I don't. I think he could handle stairs. I think Dooner can get like one of those lift systems put in. I think home prices are going to kind of probably stay pretty elevated throughout 2020.
Okay.
So if you're looking for directions for home pricing, Dooner, I think you're going to see some pretty steady rises throughout the 2020 calendar year.
Okay.
And I think so much so because there's a lot of pent-up demand for homes. I think there's going to be an underpinning of support, even if, say, the R word happened in the next few years. I think because there's such a strong demand for homes and millennials are just chomping at the bit to just get into that home market, I think there's going to be a pretty nice...
They don't want to live with mom and dad anymore, do they?
No, they've been saving up for the past 25 to 38 years. So they've been saving up for a while. So I think home prices are going to be pretty stable. And so I think, Dooner, I think if you're looking to
Now,
you
what
know,
about? I want to kind of add to this a little bit because we have a lot of people that move from expensive parts of the country to less expensive parts of the country, which
Yeah.
in turn kind of equalizes the cost of a house. Are there any specific areas that you think might be contracting a little bit? I know you said the Northeast was.
a lot of multi-family units. So I think the areas that are going to be hard are going to be the areas that were really impacted before the Great Recession, before the housing bubble. And so these were areas that were already in a bad position.
California, Florida. I mean, we keep saying California.
Yeah, California, still California in there every time. But say Detroit or something like that.
Oh, but
They're
yeah,
gonna
that's a
be
different
hit
story.
hard, and that's
Yeah.
gonna be a hard climb up. And so I don't really see a lot of growth there. Let's see. Danny's talking about what about investing in the employee? I think so. That's probably talking about when we're going over the
Yeah,
job
the
quits.
the jobless, and the quits.
So I think investing in the employee, but I think that goes further than just I think monetary, right? So I
Sure.
think being able to expand and train, if you're able to offer something else other than just, hey, here's more money, but hey, here's more responsibility. Here's how to, something to add to.
Also the environment itself.
Mm.
I think there's a shift in the culture of the United States. I mean, we're not in the 50s and 60s anymore. You
Yeah.
don't just come into work anymore and you do your 9 to 5 thing
Mhm.
and just grind it out all day long. Like people don't want to do that anymore. The quality of life has come to a point where a lot of these millennials and people.
Millennials ruin everything.
I mean, I'm just fine with millennials. I like that they think that it should be better.
Yeah.
In general, and it should. We don't. I mean, I made this statement back when I was starting. It's like it's weird to me that we all still work as many hours as we did in 1977,
Mm-hmm.
and we have so much more technology at our disposal.
Their productivity should
Yeah,
be going through the
our
roof.
productivity. I do 10 times the amount of work my dad did
Mhm.
in the 80s because he was a stockbroker in the 80s.
Okay.
And he was charting things on a piece of graph paper.
Yeah.
And I could do it in 5 seconds.
Yeah.
And I'm like, this should have diminished the amount of time. But I was still as busy as I ever been.
Mhm.
We're busy here all the time too. But
Yeah.
it's surprising to me that, we still have this kind of, and sometimes that cultural aspect has bled in. It's like, well, you should just be happy to be here. And it's like, well, I want to be, but back in some of my previous jobs, I was talking to some of the drivers, and it's kind of like, one or two people being unhappy is a thing. That's not, you're always going to have somebody that's disgruntled. But when you
Mhm.
have like a population of people
Yeah.
that is, you can tell that you walk into an office and they're just miserable.
Mhm.
Like that's a true concern.
Yeah.
And I think a lot of time people just dismiss that as bad attitudes or something like that when it's really just
Being
somebody.
weak.
Yeah.
Yeah.
Or something like that.
Yeah.
And the worst thing that you can do is be dismissive.
Mhm.
Not everybody's sitting in, some sort of golden parachute situation
Yeah. Yeah.
or they're not all sitting and maybe they just don't, they're not where they want to be,
Yeah. Yeah.
and that's fine.
Yeah.
But you don't need to just dismiss it.
Mhm.
I think that acknowledging that there is something that, and maybe you can offer what they want, and that's a
Yeah.
good thing too. It's like, well, here's your expectations.
Yeah.
Let's
Yeah.
level set.
Yeah. I think just as you touched on, there's investments that you can make in your employee,
Yeah.
other than monetary.
Sure.
And it goes right back to culture. If something can be done remotely, and you don't need to have a meeting about it, I think millennials.
I mean, they should be still held accountable.
Oh, yeah. Oh,
I
yeah.
mean, they're not. I'm
Oh,
not
yeah.
saying like everybody should be sitting on a couch getting fed grapes, and you still need to be able to work.
That was a nice
Yeah,
benefit.
I mean that
I'm
is a
gonna
good
bring
point.
that up.
All right. Well, we're running up on time here, so
Yeah.
we got about 3 minutes left. We need to get to some of these projections. So, I'll go through mine real quick.
Yeah.
I don't think it's going to be that shocking that I was predicting volumes to basically continue to slide off of last month. I expect relatively, it's hard for me to anticipate volumes continuing to exceed last year.
Yeah.
I think we were starting to see the full expansion of that pull forward effect last January.
Yeah.
If it continues into this first quarter, that's good,
Mhm.
but I don't think it's going to. So I think we'll end up basically flat in January to slightly down versus last year.
Okay.
And then capacity itself, I actually anticipate similar situation because I don't think we fully pulled out of that 2018 situation this
Yeah.
time last year yet. So I do expect rejections to basically remain on par, if not a little bit under
Gotcha.
last year by the end of the month. I think
Gotcha.
we'll we'll see those rejection rates come back, down to earth, and so will spot rates. But that's not my forecast for the rest of the year.
Yeah, just till next week.
Yeah, right.
Yeah, and I have housing starts up, retail sales up, and industrial production down. So that's going to be my expectations for the data releases coming up until the next podcast.
Okay, well, Anthony, we were in Chicago just recently.
Yeah.
And we didn't get to eat this particular piece of food.
I did, and I wasn't impressed.
And this is upsetting to me because I go to Chicago every year, and I order a deep dish pizza.
It's not pizza, though.
You can call it what you want. So you're telling me that, when you order this item and you see it sliced just like a pizza would be, the only thing that's really different here is the fact that it's a little thicker.
It's a bread bowl.
So it's got super thick crust. But it also it's actually more cheese.
And cheese is overrated too.
They've basically doubled, if not tripled, some of the main ingredients of pizza.
I can't even just pick it up. It's
have a triple-decker pizza, if you will.
Sounds awful.
So by this same logic, thin crust pizza is not pizza.
It's closer to the original form of pizza. And so thin crust pizza, New York style pizza, that's like premium. That's, if you can't fold it, I don't want it. And when I'm looking at Chicago style pizza, it's essentially, I'm sorry to all my Chicago friends. I know there's one in particular that I'm going to hear from.
Yeah, you should. You should. I support you.
He's going to disown me as a friend. But yeah, Chicago style pizza is a bread bowl with pasta sauce.
You know what? It's like I told you. If you want to be the villain every week, I'm fine with it.
You're going to eat it with a spoon?
I'll have, you don't like bacon, soup? You don't like deep dish pizza. It's fine. It's fine. Die Hard is still not a Christmas movie.
It's a Christmas Eve movie.
Yeah. All right. Well, that'll do it for this week's Freightonomics.
Yes.
Good show today. Everybody out there, stay safe and try to enjoy the January.
It's amazing.
Yeah. All right. We're out.